Are you ready to step up your game around fraud? This is the IssuesWatch podcast. Hello, and welcome to the IssuesWatch podcast. I'm Matt Charne, your host for this week's accounting and auditing episode. I'm an audit director at Clifton Larson Allen. And joining me today is Marissa Flood, Assurance Senior at CLA. Thanks for being here.
Thanks for having me.
Always good to have you. This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. A quick disclaimer. The views and statements expressed herein are our own and not necessarily those of the NJCPA or of CLA. All right, so getting into it, today we have yet another exposure draft, this time from the AICPA's Auditing Standards boards, or ASB, and we'll probably use that as our reference for the remainder of this episode, talking about updates to how we're going to treat fraud. Now, the article that we have said that they researched this for 3 years between different parts of research and outreach, which I found pretty amazing because the key proposed changes that are in here, now Marissa, I don't know how you feel, but to me, none of these were terribly surprising. And I'll run through just the summary real quick, and then we can get into the real nitty-gritty detail of it. But the 4 or 5 points that the article kind of pointed out that are going to be in the exposure draft are new procedures required when fraud is identified or suspected, an emphasis on professional skepticism throughout the audit, clarification of fraud's relationship with corruption, bribery, money laundering, expanded retrospective review of prior accounting estimates. I think that's the biggest change that I'll probably point out a little bit later on. And the new requirements for engagement team's competence and time allocation. Now, I don't know about you, but doing procedures around it, professional skepticism, requirements around competence of the team, time allocation, this doesn't sound like groundbreaking stuff to me.
No, when I was reading this article, I was kind of like, either we're really good or I'm kind of doing a lot of this already.
Nice to get a pat on the back. Right?
Yeah, and it's, nice to be reassured that what we're doing is kind of the direction that they want us to be going, But
right.
I do think, as we get into the nitty-gritty stuff of everything and the proposed changes, I do think the keys here are going to be like documentation and things like that and understanding and kind of digging in deeper. But the emphasis on the proposed changes, I do feel like we have done a lot of this.
Yeah, I would hope that for those listening, there's nothing here that's too new. Maybe the retrospective review would be the only one that kind of jumps out to me as something that's actually a new requirement.
Yeah.
But overall, I would think that these things are kind of required already. And if you've been listening to the podcast for a little while now, you'll notice that a lot of this sounds very familiar to SAS 145, those changes that came out a couple years ago and that we've done some trainings on in the past. And you would be correct because it really is just re-emphasizing all the stuff that was already put out in SAS 145. And the exposure draft itself says they're reinforcing a, quote, holistic view of fraud risk. So I guess trying to just take SAS 122 and push all of that guidance uniformly back to SAS 145 and just say, this is pretty much what we're going to focus on.
Yeah, and, I kind of going back up to the top of the article where it said it took 3 years of research and outreach, and it's aiming to clarify and strengthen this standard.
Right.
I do think that they've kind of, I'm speculating here, but it seems to me like they're kind of going hand in hand with, SAS 145, creating the holistic risk assessment approach and, things like that, and then taking this and kind of aligning it to make it a whole more holistic approach there.
Exactly. So we've used the term holistic approach a lot. Let's dive into what that means a little bit more, because the article used a lot of language summarizing the exposure draft and just saying that the holistic approach isn't necessarily focused only on quantitative data anymore. Usually when you look at your financial statement risks, or if you, especially fraud risks, you would think, well, I'm going to look at the big accounts first, right?
Yep.
So if I'm going to find something, I'm going to find something big and something that's important. But at the end of the day, what really matters when it comes to fraud is that there is no materiality for fraud,
Exactly.
right? That's a standard we all learn when we study for the CPA exam. Hopefully that's what we're taught in our accounting classes, things like that. So now that qualitative data is becoming much more important, which is why one of the things that it points out specifically that we said at the top was looking for the relationship between corruption, bribery, money laundering, things like that. It's not necessarily how much activity is moving through a certain account anymore. The standard is trying to say, think about who's responsible for this account. Is it the CEO? Is it somebody in governance? Is it someone with a lot of authority within your entity? And if that's the case, then they might have a lot more opportunity to collude or to move stuff around without people realizing it. And you should be designing your procedures to kind of take a look at stuff like that.
Yeah, and I'm kind of backing it up to SAS 145 again, but one of the examples that kind of stood out to me in the article was like, you have a risk assessment and an area is low, right? But then you go back and you're kind of doing your fraud procedures. You're noticing that revenue, say, spikes weirdly during quarter 4 or something like that.
Okay.
Well, you're going to question the timing and the documentation, even though you said it was low risk at the beginning.
Right.
Now, because of the holistic approach, it's going to be, you're going to go back to that. You're going to check on that. You're going to ask the questions that you need to ask. And I do think, in my opinion, I do think it's kind of bridging the gap that maybe we needed after SAS 145 because it was such a big, standard change.
Exactly. Yeah, and SAS 145 would have you looking at those controls around those specific time of year anyway. Say it's a business that's very seasonal. Maybe it's a retail business. During quarter 4, you would think around the holidays, they would sell a lot more. Maybe that spike in revenue was a little more expected, but it seems like under SAS 122's changes that are being proposed, because of that holistic approach, if that spike hadn't happened in the past or your management wasn't really expecting it and maybe it came out of the blue, you would have to design procedures and document why you think, A, that this is a fraud risk in general, and that's going to go back to SAS 145, and then after your planning, continue to document why you're continuing to kind of do procedures around this, making sure that all that stuff makes sense. You're attacking it from all angles, really. You're not leaving any certain revenue streams out of that. Maybe one spiked, the other didn't. Was the other one supposed to? Did that revenue get buried so that somebody could pocket the money somewhere? There's a lot of nuances to this kind of thing, and I think that's why the standard uses language that's very overarching and a little esoteric, if I dare use that term. But because there's so much judgment involved in something like this.
Yeah. And, that kind of goes back to our AI discussion a couple weeks ago, maybe last week. And this is something that AI cannot do. They cannot look at somebody and decipher whether they're telling the truth. They cannot look at something and say, oh, this looks they could say it looks unusual, but this looks fictitious, and this is, so it's something that we have judgment on.
The only basis for it saying it's unusual, though, is going to be the data that you give it.
Exactly.
So you're feeding all the data to any kind of tool that you're going to use, and the article that we had actually did point out that data analytics can be used to track different trends and patterns and things like that, but the program itself would never know that those trends or patterns are unusual unless you, the auditor, are looking at it to say, this looks like something I've never seen before. What's going on here? Yeah. And that stuff is going to have to be evaluated much closer, and it's going to have to be communicated a lot more often. And I think those are the changes that the AICPA is trying to push through here. So some of the other examples that might be important to kind of realize that you might be doing already or might be new, again, going back to that holistic approach, are going to be things like vendor kickbacks or cyber fraud. Now, SAS 145 already put out the requirement that we have to look at IT and things like that, but cyber fraud isn't necessarily a scope of an audit, right? It's not something that I would think an auditor would have to do, but it is something that we have to think about now. And as you're going through your SAS 145 procedures and evaluating controls and looking at all of the pieces of who's responsible for what kind of programs they're using, any third parties that are involved, where are they exposed? And where exactly could cyber fraud occur? That's something that these proposed standards are going to make you consider, and I'm sure document and then have to address in some way, shape, or form.
Yep, exactly. Yeah. I think that's going to be really important, and I know we've talked about this as well. We've seen IT controls becoming more prominent, and so the cyber side of that now and the fraud side is definitely what I would say going to be very important going forward. Oh yeah, it's going to be, it's everywhere at this point, right? Like we said before, I don't know of a single business that doesn't use some kind of program, and if there's some kind of program, there's an opportunity for something fraudulent to occur, unfortunately. Yeah. So we're going to have to just be thinking about that and addressing it as we go through our planning, but more importantly, according to this exposure draft, as we go through our procedures as well. Yeah, so it's not only internal anymore, it's external too.
Exactly. Now, one of the other things that I mentioned at the top was that One of the proposed changes is to perform retrospective reviews on estimates, not just on significant estimates, but all prior estimates that are happening throughout your audit. This was really surprising to me because a retrospective review is not necessarily an easy procedure, and I may be coming at it a little biased from the procedures that I'm used to doing, which are retrospective reviews on volume discounts and SaaS contracts and things like that, which we see a lot in the technology industry. But there are lots of estimates that are very common that pop up in an audit, like your fixed asset useful lives, your intangible asset useful lives, any kind of goodwill impairment or goodwill useful life, which could be separate from your intangibles, accounts receivable reserves, warranty reserves or estimates, certain accruals, things like that. So retrospective review on all that stuff is a lot of new work.
Yeah, I would really like to see, I think, more detail and at least some commentary on that, because I would say the way it's written right now does seem like that is going to be the biggest change.
Right.
And you know, maybe the most difficult change, especially for some clients.
Right.
So that one I would definitely look out for, and if that's something you feel strongly about, I would maybe throw a comment in there for that one.
I was just going to say, I might be overreacting because it could be very easy to say, do a retrospective review on your AR reserve, and your reserve is saying, I'm not going to collect X amount of AR, right? And then you come back next year and you say, well, I still didn't collect it, so my reserve must have been perfect. Maybe it's an easier procedure than I perceive it to be, but I have a feeling that certain things are going to pop up that teams are going to start seeing as that requirement becomes necessary, and they're going to be very surprised in the amount of work that it actually takes to do a retrospective review on these certain things that might be popping up. So that being said, if you feel strongly about this, comments are due on this exposure draft by October 3rd, 2025. So if you want to leave some comments for the AICPA, telling them to put in a little more guidance for that or to take that out completely because it's just not necessary based on some of the things that we just talked about, feel free to do so on the AICPA's website. And once that's all final, it sounds like this could be effective by December 15th, 2028. So certainly a ways away, but you know, we'll be keeping an eye on it because I'm sure it'll be changing and that'll be here before we know it.
Yeah, definitely something to follow up on because some of these were things that are going to be important going forward.
Oh,
so.
Absolutely. Great. In closing, here are some upcoming fraud-related events. Auditing the Complex, Revenue and Leases, is on August 22nd. And for those who are newer to auditing, Auditing the Basics, Cash and PP&E, is on August 25th. There is also a 4-hour webinar on fraud and single audits on August 25th. Get details on these events and more at njcpa.org/events. And be sure to join the Society's Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Thank you so much for watching or listening.